weekly newsletter for the 18th of the 11th, 2008. This week, I'm going to give you a little bit of homework. What I would like you to do is spend some time listening and paying attention to what the media is saying regards the market. This gives you a clear indication that short term, no one really knows what the market is doing. There's no rhyme or reason for the current market swings which we have been seeing. A good example was last Thursday when we saw the US market have a intraday swing of 12%. Some people made some money and some people lost a lot of money. But what's important here is where's the market going and who are we listening to? Now this week for homework, what I'd like you to do is just pay attention to what the commentary you're hearing from the media sectors. Now, what you'll generally hear are things like the market fell overnight due to concerns over future economic recessions and how deep it might go. Look, translation of this is, I have no idea what's going on, but my ego won't let me tell you that. As such, I'll make up some generic comment which means nothing, but sounds intelligent, and most likely you have no idea either, so you'll disagree with me. It's this sort of media hype that heightens an already anxious investor. As such, be aware of it, and please pay no attention to it. What we do know is the long-term trend where the market is going. Short-term, look, I have no idea what's going to happen in the next couple of days. It's almost impossible to predict, and there is no rhyme or reason about it. There is no fundamentals or technical issue as to why the market is behaving as it is. But what I do know is what's going to happen in the longer term. And here's a couple of the issues. There's going to be higher unemployment. There's going to be lower interest rates, and credit's going to be harder to get. There's going to be higher inflation in a slowing economy. There's going to be lower growth in the share market, but higher yields. The property sector will fall. Government will start stimulus packages. China will continue to grow and is working very hard on its own stimulus package. And the recession, or the economic slowdown as we like to call it, will last until about 2011. We know this historically. This is what's happened in the past. Now what we need to do is come up with a plan that will help us get through the next 2 to 3 years so we can start moving ahead and getting ourselves set for a benefit from it. So the plan is very simple. Achieve an average return of 8%. This is back to basics. Now how do we do this? Look, higher unemployment means we need to start reducing our debt. First, we do non-deductible debt. Second, deductible debt. It needs to be down to a reasonable basis. If you do want to gear, no more than 30% in the market. Anything above this is ridiculous. Now, lower interest rates means that we can pay our home loans off sooner. So we should use any surplus to pay down home loans or any investment loans as quickly as you can. Think of it this way. If you're paying 8% of interest on a loan and you use your surplus cash to pay down that loan, you're earning 8% on that surplus cash. Right away, you're making the 8%, which is our target or our plan for the year. Now, don't hold cash. Look, I know a lot of people are scared right now. You want to move to cash. It's a safety mechanism. But for a longer term, this is not going to be a good thing. Higher inflation running around about 5%, cash earning you 6%. Once you do the tax and once you do the calculations, you'll find you're making a negative return of 1% per annum. Now, that's not good long term. Yes, the market's down and the market is scary, but it's still a good place to be long term. Now, slowing economy also means that companies' earnings will drop. In turn, so too will dividends. So you need to buy right now where prices are low. Get into stocks which we know aren't going to fall over and the dividends will hold up. Take a look at NAB. If they cut their dividends in half, you'll still be receiving 7% return. So you only need a 1% growth. Look, you may not get that in the next 12 months, but I bet the bottom dollar, you'll make more than 3% return over the next 3 years in NAB. Now, chasing higher yields is something we should also look at. Now, they can do this through preference shares. Preference shares on big blue chip companies are paying between 9 and 11% to maturity. There's also some growth in there. So look, big blue chip preference shares can also help us achieve that 8% yield. Now, property, stay out of it for now. High inflation, high unemployment, and credit crisis has not hit the property market just yet. There will be a time to be in this sector, but right now is not it. Now, we also know the government is trying to stimulate the economy and they'll go into a deficit very shortly. They need to do this to reduce unemployment. Now, this is a good thing. We need to look for stocks in this sector. My favourite is Cardno. Buy it for a good yield, hold it for the government spending. They should benefit from it. China is also stimulating their economy, and this will increase demand for resources. Now, believe me, long-term resources stocks will be good, and you need to be in these as well. But be very small, have a small holding, because they don't pay much in the way of yield. But if you take a 10-year time frame, you'll still get some good growth. So keep an eye on BHP, Rio, Woodside, Newcrest. If these stocks drop dramatically and look massively oversold, then it's probably a good time to pick them up with a 10-year time frame. Remember that 10-year time frame. Don't ring me in 10 months. And 2011 is not a long way off. It's not going to all be bad. There will be some good times and there will certainly be some good opportunities between now and then. But if you focus on income and growth and curb some of your spending, you'll be fine and you'll be set to take advantage of when the market does turn back up. So for now, we have to plan long term. Take the time to put it into action. Stop listening to all the hype, stop listening to the media, and get back to basics. The downturn will pass with time. Whether or not you benefit from it will depend on how you act now. For more information, go to our website at growyourwealth.com.au.